We're live. We're live. Welcome to Davesplay live. We're live. EVK, our big winner. The Dow Jones closed up 0.29% today at 29,970. The Nasdaq closed up 0.23% at 12,377 today. Davesplay today, EVK, the big winner. EVK closed up 150% at 525. Stock opened up at 577. Spiked as high as 830. And the low of the day, 475. The volume on the day was 108 million. Compare and contrast that to their average volume of 3 million. EVK. Chad had asked me to check out MKD, the chart on MKD on our last live. There's nothing to like on this chart. This chart is trending down. Okay, this chart is very ugly, not looking good. MKD. And Chad also asked me to look into Gril. GRIL. Also trending down. It's not a good look, Chad. Wait for a reversal on these two, Gril and MKD. And this is a 5-day chart I'm looking at. Also, Tmdi, Daxter Dax wanted me to check out Tmdi. Tmdi is showing a lot of weakness right now. It has to stay above 138 in my opinion. 138. I think it's at 133 right now. It closed with no change today. Made that doji candle today. It's searching for directions. Tmdi. And also they're down 5% after hours. Wait until this one get back above 138 if you're planning on starting a position. DAX. Okay, Tmdi. Tmdi above 138. Gonna be a quick live tonight. I'm exhausted.
Most people have an innate drive
Please like
to
the live.
their personal best, to develop their abilities to the fullest. This drive, along with the pleasure of the game and the lure of money, propels traders to challenge the markets. Good traders tend to be hard-working.
Douglas Anderson in the building. Boom, bam. Welcome, Douglas. Welcome, Faith Crusader. You want me to check out Tnxp? I'm going to make a note of that.
Money follows almost as an afterthought. Successful traders keep honing their skills, trying to reach their personal best is more important to them than making money. A successful New York trader said to me, "If I become 0.5% smarter each year, I'll be a genius by the time I die." His drive.
I remember a few months ago that one came up with some huge news. Tnxp.
A professional trader from Texas invited me to his office and said,
stock spiked about 100% that day, but it faded.
You won't be able to tell whether I am $2,000 ahead or $2,000
I remember this one,
behind on that
Tnxp.
day. He has risen to a level where winning does not elate him and losing does not defeat
Shout
him.
out to
He is so focused on trading right
Officer.
and skills that money no longer influences
What's his name again?
The trouble with self-fulfillment is that many people have a self-destructive streak. Accident-prone drivers keep destroying their cars, and self-destructive traders keep destroying their accounts. Markets offer unlimited opportunities for self-sabotage, as well as for self-fulfillment. Acting out your internal conflicts in the marketplace is a very expensive proposition. Traders who are not at peace with themselves often try to fulfill their contradictory wishes in the market. If you do not know where you are going, you will wind up somewhere you never wanted to be.
I think the gentleman's name is John. John, Officer John. He tipped me off on Tnxp.
You may have a brilliant trading system.
About they're coming out with news. The stock spiked 100% in the pre-market the following day.
When you recognize that a gambler's high or fear is clouding
Shout
your
out to
mind,
John.
stop trading. Your success or
Please like the
failure as a
live.
trader depends on controlling your emotions. When you trade, you compete against the sharpest minds in the world.
If you want me to check out any tickers, email me at DaveJamaica8@AOL.
The battle is over. You are responsible for every trade that you make. A trade begins when you decide to enter the market and ends only when you decide to take yourself out. Having a good trading system is not enough. Most traders wash out of the markets because psychologically they are not prepared to win. Markets offer enormous temptations, like walking through a gold vault or through a harem. Markets evoke powerful greed for more gains and a great fear of losing what we've got. Those feelings cloud our perceptions of opportunities and dangers. Most feel like geniuses after a winning streak. It is exciting to believe that you are so good you can bend your own rules and succeed. That's when traders deviate from their rules and go into a self-destruct mode. Traders gain some knowledge, they win. Their emotions kick in, and they self-destruct. Most traders promptly give their killings back to the markets. The markets are full of rags to riches to rags stories. The hallmark of a successful trader is his ability to accumulate equity. You need to make trading as objective as possible. Keep a diary of all your trades with before and after charts. Keep a spreadsheet listing all your trades, including commissions and slippage, and maintain very strict money management rules. You may have to devote as much energy to analyzing yourself as you do to analyzing the markets. When I was learning how to trade, I read every book on trading psychology I could find. Many writers offered sensible advice. Some stressed discipline. You cannot let the market sway you. Do not make decisions during trading hours. Plan a trade and trade a plan. Others stressed flexibility. Do not enter the market with any preconceived notions. Change your plans when markets change. Some experts suggested isolation. No business news, no Wall Street Journal, no listening to other traders, just you and the markets. Others advised being open-minded, keeping in touch with other traders, and soaking up fresh ideas. Each piece of advice seemed to make sense, but contradicted other equally sensible advice. As a trader, you are in the business of trading. You need to define your businessman's risk, the maximum amount of money you will risk on any single trade. There is no standard dollar amount, just as there is no standard business. An acceptable businessman's risk depends, first of all, on the size of your trading account. It also depends on your trading method and pain tolerance. The concept of a businessman's risk will change the way you manage your money. A sensible trader never risks more than 2% of account equity on any trade. For example, if you have $30,000 in your account, you may not risk more than $600 per trade. And if you have $10,000, you may not risk more than $200. If your account is small, limit yourself to trading less expensive markets or mini contracts. If you see an attractive trade, but your stop would have to be placed where more than 2% of equity would be at risk, pass that trade. Avoid risking more than 2% on a trade the way a recovering alcoholic avoids bars. If you are not sure how much to risk, err on the side of caution. If you commissions on a broker and slippage on a floor trader, you give up control of your trading life. Try to reduce both, but take responsibility for them. If you lose even $1 more than your businessman's risk, including commissions and slippage, you are a loser. Do you keep good trading records? Poor record keeping is a sure sign of a gambler and a loser. Good businessmen keep good records. Your trading records must show the date and price of every entry and exit, slippage, commissions, stops, all adjustments of stops, reasons for entering, objectives for exiting, maximum paper profit, maximum paper loss after a stop was hit, and any other necessary data. If you bail out of a trade within your businessman's risk, it is normal business. There is no bargaining, no waiting for another tick, no hoping for change. Losing $1 more than your established businessman's risk is like getting drunk, getting into a brawl, getting sick to your stomach on your way home, and waking up in the gutter with a headache. You would never want that to happen. Each trader has his own demons to exorcise on the journey to becoming a successful professional. Here are several rules that worked for me as I grew from a wild amateur into an erratic semi-professional, and finally, into a professional trader. You may change this list to suit your personality. 1. Decide that you are in the market for the long haul. That is, you want to be a trader even 20 years from now. 2. Learn as much as you can. Read and listen to experts, but keep a degree of healthy skepticism about everything. Ask questions and do not accept experts at their word. 3. Do not get greedy and rush to trade. Take your time to learn. The markets will be there with more good opportunities in the months and years ahead. 4. Develop a method for analyzing the market. That is, if A happens, then B is likely to happen. The markets have many dimensions. Use several analytic methods to confirm trades. Test everything on historical data, and then in the markets using real money. Markets keep changing. You need different tools for trading bull and bear markets and transitional periods, as well as a method for telling the difference. 5. Develop a money management plan. Your first goal must be long-term survival. Your second goal, a steady growth of capital. And your third goal, making high profits. Most traders put the third goal first and are unaware that goals 1 and 2 exist. 6. Be aware that a trader is the weakest link in any trading system. Go to a meeting of Alcoholics Anonymous to learn how to avoid losses or develop your own method for cutting out impulsive trades. 7. Winners think, feel, and act differently than losers. You must look within yourself, strip away your illusions, and change your old ways of being, thinking, and acting. Change is hard, but if you want to be a professional trader, you have to work on changing your personality. Mass psychology. Wall Street is named after a wall that kept farm animals from wandering away from the settlement at the tip of Manhattan. The farming legacy lives on in the language of traders. 4 animals are mentioned especially often on Wall Street: bulls and bears, hogs and sheep. Traders say bulls make money, bears make money, but hogs get slaughtered. A bull fights by striking up with his horns. A bull is a buyer, a person who bets on a rally and profits from a rise in prices. A bear fights by striking down with his paws. A bear is a seller, a person who bets on a decline and profits from a fall in prices. Hogs are greedy. They get slaughtered when they trade to satisfy their greed. Some hogs buy or sell positions that are too large for them and get destroyed by a small adverse move. Other hogs overstay their positions. They keep waiting for profits to get bigger even after the trend reverses. Sheep are passive and fearful followers of trends, tips, and gurus. They sometimes put on a bull's horns or a bear skin and try to swagger. You recognize them by their pitiful.
Let me take the score. Excuse me. Hello? I'm in the middle of a live. I'm not that tired. Yes. Okay, tune in. Okay. Are you?
Bleeding when the market becomes volatile. Whenever the market is open, bulls are buying, bears are selling, hogs and sheep get trampled underfoot, and the undecided traders wait on the sidelines. Quote machines all over the world show a steady stream of quotes, the latest prices for any trading vehicle. Thousands of eyes are focused on each price quote as people make trading decisions. There are 3 groups of traders in the market: buyers, sellers, and undecided traders. Ask is what a seller asks for his merchandise. Bid is what a buyer offers for that merchandise. Buyers and sellers are always in conflict. Buyers want to pay as little as possible, and sellers want to charge as much as possible. If members of both groups insist on having their way, no trade can take place. No trade means no price, only wishful quotes of buyers and sellers. A seller has a choice: to wait until prices rise or to accept a lower offer for his merchandise. A buyer also has a choice: to wait until prices come down or to offer to pay more to the sellers. A trade occurs when there is a momentary meeting of 2 minds. An eager bull agrees to a seller's terms and pays up, or an eager bear agrees to a buyer's terms and sells a little cheaper. The presence of undecided traders puts pressure on both bulls and bears. When a buyer and a seller bargain in private, they may haggle at a leisurely pace. The two must move much faster to bargain at the exchange. They know that they are surrounded by a crowd of other traders who may butt in on their deal at any moment. The buyer knows that if he thinks for too long, another trader can step in and snap away his bargain. A seller knows that if he tries to hold out for a higher price, another trader may step in and sell at a lower price. The crowd of undecided traders makes buyers and sellers more anxious to accommodate their opponents. A trade occurs when there is a meeting of two minds. Each tick on your quote screen represents a deal between a buyer and a seller. Buyers are buying because they expect prices to rise. Sellers are selling because they expect prices to fall. Buyers and sellers trade while surrounded by crowds of undecided traders. They may become buyers or sellers as prices change or as time passes.
Herb the Great in the building, like Sndl.
Selling by bears pushes markets down, and undecided traders make everything happen.
Where's Sndl these days?
In buyers and sellers. Traders come to the markets from all over the world, in person, via computers, or through their brokers. Everybody has a chance to buy and to sell. Each price is a momentary consensus of value of all market participants.
Please like the live.
Expressed in action. Price is a psychological event, a momentary balance of opinion between
EVK, Davesplay, big winner today.
Masses of traders, buyers, sellers, and undecided people. The patterns of prices and volume reflect the mass psychology of the markets. Huge crowds converge on stock, commodity, and option exchanges, either in person or represented by their brokers. Big money and little money, smart money and dumb money, institutional money and private money all meet on the exchange floor. Each price represents a momentary consensus of value between buyers, sellers, and undecided traders at the moment of transaction. There is a crowd of traders behind every pattern in the chart book. Crowd consensus changes from moment to moment. Sometimes it gets established in a very low-key environment, and at other times, the environment turns wild. Prices move in small increments during quiet times. When a crowd becomes either spooked or elated, prices begin to jump. Imagine bidding for a life preserver aboard a sinking ship. That's how prices leap when masses of traders become emotional about a trend. An astute trader tries to enter the market during quiet times and take profits during wild times. Technical analysts study swings of mass psychology.
Sign up with my Webull link.
Each trading session is a
EVK was in at about $3 at 4 a.m.
And bears who profit when prices fall.
You would have tripled your money today.
Technical analysts is to discover the balance of power between bulls and bears and bet.
Webull trading starts at 4 a.m. sharp.
You should buy and hold. If bears are much stronger, you should sell and sell short. If both camps are about equal in strength, a wise trader stands aside. He lets bullies fight with each other and puts on a trade only when he is reasonably sure who is likely to win. Prices, volume, and open interest reflect crowd behavior. So do the indicators that are based on them. This makes technical analysis similar to that we use statistical methods.
Thanks for all the likes.
They are artistic to the extent that we use personal judgment to interpret our findings. What is the reality behind market symbols, prices, numbers, and graphs? When you check prices in your newspaper, watch quotes on your screen, or plot an indicator on your chart, what exactly are you looking at? What is the market that you want to analyze and trade? Amateurs act as if the market is a giant happening, a ball game in which they can join the professionals and make money. Traders from a scientific or engineering background often treat the market as a physical event. They apply to it the principles of signal processing, noise reduction, and similar ideas. By contrast, all professional traders know full well what the market is. It is a huge mass of people. Every trader tries to take money away from
Shout out to Flash Melody for bringing up Jag X.
The members of the market
that one ran for a couple of days.
They are united by modern
JAGX.
telecommunications in the pursuit of profit at each other's expense. The market is a huge crowd of people. Each member of the crowd tries to take money away from other members by outsmarting them. The market is a uniquely harsh environment because everyone is against you and you are against everyone. Not only is the market harsh, you have to pay high prices for entering and exiting it. You have to jump over 2 high barriers, commissions and slippage, before you can collect a dime.
Don't forget, you could email me with your stocks. I'll look into them. Just give me some time. Dave Jamaica 8 at AOL.
Slippage when your order arrives on the floor. They try to take another bite out of your account when you exit your trade. In trading, you compete against some of the brightest minds in the world while fending off the piranhas of commissions and slippage. Private traders usually come to the market after a successful career in business or in the professions. An average private futures trader in the United States is a 50-year-old, married, college-educated man. Many futures traders own their own businesses, and many have postgraduate degrees. The 2 largest occupational groups among futures traders are farmers and engineers. Most people trade for partly rational, partly irrational reasons. Rational reasons include the desire to earn a large return on capital. Irrational reasons include gambling and a search for excitement. Most traders are not irrational motives. Learning to trade takes hard work, time, energy, and money. Few individuals rise to the level of professionals who can support themselves by trading. Professionals are extremely serious about what they do. They satisfy their irrational goals outside the markets, while amateurs act them out in the marketplace. The major economic role of a trader is to support his broker, to help him pay his mortgage and keep his children in private schools. In addition, the role of a speculator is to help companies raise capital in the stock market and to assume a price risk in the commodities markets, allowing producers to focus on production. These lofty economic goals are far from a speculator's mind when he gives an order to his broker.
When is the Dow heading back over 30,000?
Are responsible for a huge volume of. Their deep pockets give them several advantages. They pay low institutional commissions.
Maybe tomorrow.
Hire the best researchers, brokers, and traders.
Let's see.
Some even strike back at floor traders who steal too much in slippage. The spate of arrests and trials of Chicago floor 1990 and 1991 began when Archer Daniels Midland, a food processing firm,
A&D Gordon in the house.
A friend of mine who heads a trading desk at a bank bases some of his decisions on a service provided by a group of former CIA officers.
Signed dime.
To detect early trends in society and send their reports to him. My trader friend culls some of his best.
Is that a company? Let me write that down. Marlon Newby in the building.
For those experts,
blessings.
For his firm,
welcome.
The millions of dollars in trades. Most private traders do not have such opportunities. It's easier for institutions to buy the best research. An acquaintance who used to trade successfully for a Wall Street investment bank found himself in trouble when he quit to trade for himself. He discovered that a real-time quote system in his Park Avenue apartment in Manhattan did not give him news as fast as the squawk box on the trading floor of his old firm. Brokers from around the country used to call him with the latest ideas because they wanted his orders. When you trade from your house, you are never the first to hear the news, he says. Some large firms have intelligence networks that enable them to act before the public. One day, when oil futures rallied in response
Please
to
like the live
platform in the North Sea, I called a friend at an oil firm. The market was frantic.
One more minute to go. One more minute to go.
Oil futures half an hour.
I gotta get up 3:30.
He had gotten a telex from an agent.
Work on these plays for tomorrow. Please set your notification,
Timely information is priceless.
as these videos are time sensitive. especially if you trade pre-market.
The firms that deal in both futures and cash markets have two advantages.
Follow me on Twitter
inside information
for my stock alerts
from speculative
at Petit.
Recently, I visited an attendance at a multinational oil company. After passing through security that was tighter than at Kennedy International Airport, I went through glass-enclosed corridors. Clusters of men huddled around monitors trading oil products. When I asked my host whether his traders were hedging or speculating, he looked me straight in the eye and said, "Yes." I asked again and received the same answer. Companies crisscross the thin line between hedging and speculating based on inside information. Employees of trading firms have a psychological advantage. They can be more relaxed because
so I'll be researching Tnxp for Faith Crusader, and I'll look into Sndl for Herb the Great. Earlier on the live, I checked out Mkd and Gril for Chad, and I also checked out Tmdi for
how can an individual trader
Daxter.
institutions and win? First, many institutional trading departments are poorly run.
I'm going to interrupt this. Let me take a look at stocks moving in the AH. So we have these Chinese companies moving. Hgsh. They're up 102% at 355. You might want to research these tonight. Hgsh. And also, what else we got? Reto. Reto. They're up 34% at 93 cents. Let's see what tomorrow brings. That's all I have tonight. Shout out to Faith Crusader, Douglas, Herb the Great, Marlon Newby, I'll see you tomorrow with the plays. Flash Melody in the building. Flash Melody, let me write these stocks down for you. I'm about to end the live. Shout out to Flash Melody for JAGX. Was it JAGX? Yes, JAGX. Shout out to Flash for that one last week. That one ran for like 3 days. So you have KBNT, SFT, Kndi. Did Kndi rebound? That thing was falling like a brick for like 3 days straight. I told you these EVs are exhausted. A lot of irrational exuberance, the EVs. And sure enough, Kndi dropped like a ball. Okay, ladies and gentlemen, thank you for liking the live. I'll see you in the AM with Davesplay. Have a good night. I'm out. Thanks for tuning in, each and every one.